The euro-pound pair slipped near 0.865 after German retail sales disappointed again. EUR GBP Softens frames the pressure because the move matters because weak German demand is arriving right before ECB and Bank of England decisions. Retail sales fell 1.2% month-on-month versus expectations for a 0.5% decline, marking a third straight monthly drop. The useful part is the test in front of the story, not a broad market slogan. The 0.865 support area is the first technical line to watch. That gives the opening a measurable checkpoint and keeps the story tied to named levels, named participants, named rules, or named product steps. The confirmed baseline is weak German consumer data. The ECB is expected to hold rates, while markets are watching for guidance on whether cuts could come later. The Bank of England is also expected to hold, but the vote split matters because UK services inflation remains elevated in the supplied evidence. This baseline matters because it gives viewers the part that can be checked before any larger conclusion is drawn. It also limits the story to the facts already visible. The pair is being pulled by both data and policy expectations. The viewer can separate the setup from speculation. One side is the factual baseline, and the other is the result that still needs confirmation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is a currency cross reacting to relative weakness and central bank tone. In plain English, the euro can weaken if Eurozone data disappoints, while sterling can gain if the BoE sounds more hawkish. For EUR GBP Softens, that mechanism matters because the rate decision week can turn a support test into a directional move. The stress point is specific, whether ECB language is dovish enough to pressure the euro further. This is the part that makes the headline useful, because it explains why one level, deadline, filing, reserve figure, integration, or data point can change behavior. The direct impact lands on FX traders, hedgers, importers, exporters, and euro-pound exposed portfolios. A break below 0.865 could extend downside focus towards 0.86, while resistance sits near 0.87. The pair's reaction depends on whether the ECB or BoE delivers the stronger policy surprise. The practical consequence is support and guidance are now tied together. That is the viewer value here, understanding who faces the change and why the change is not the same for every participant. The effect is not evenly distributed, so the segment focuses on the group with the clearest supported exposure. The unresolved part is which central bank creates the bigger surprise. Weak retail sales alone do not confirm a sustained euro-pound breakdown. That gap matters because policy guidance can offset or amplify the data move. The cleaner proof would be a confirmed break below 0.865 or a hawkish ECB surprise. Until that appears, the story should be read as a defined setup with a real open question. That does not make the story smaller. It makes it cleaner because the unresolved detail is exactly where risk can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The concrete signal to follow is 0.865 support, ECB guidance, and the BoE vote split. Those signals decide whether the pair extends lower or rebounds. EUR GBP Softens becomes easier to read if the pair breaks support and ECB guidance leans dovish. It weakens if support holds and BoE messaging weakens sterling. The final readout is simple. This is a support test wrapped inside policy risk. A strong next signal should be observable, not emotional. A filing, close, data release, official term, usage number, or liquidity change.